move here gives me a nice buy opportunity into that long accumulation. The max move gives me a perfect top line sell accumulation. The max move gives me a possible buy. That's why I wanted a little bit deeper. And the max move gave me the perfect sell trade here. Do you see that? So you can see that max move catches all of these moves. You know, it would have been ideal if that had gone above for the accumulation. Sometimes it doesn't go above for the accumulation. Sometimes it doesn't quite make it, like it didn't make the bottom edge here. So it would have been perfect if it had made the bottom edge. The best accumulation is if the green goes clean above the purple. So you can see that this is not perfect, but because the price goes below the bottom edge, we get this sense of an accumulation here. Because this is now very clearly green below purple, we're trying to buy pullbacks, preferably into a bottom edge. And when this happens, this is the perfect accumulation here, and this is the perfect accumulation here. So these two perfect accumulations have resulted in two perfect sell trades, haven't they? So we're relying on the accumulation, which is part of market structure, to give us that opportunity. Because otherwise it's basically a short cover rally, or alternatively, it's simply just a long liquidation. You know, so sometimes it's in line with price. So for example, here, you see we don't get any of that short accumulation. You don't get any of that short accumulation here, do you? So you recognize that that short accumulation is not visible at that stage. It's basically just a long liquidation. So you can't see that, can you? Okay, there it is there. So you don't get that short accumulation on this occasion, do you? See how the green is always lagging behind the purple? So you can obviously recognize it when it hangs about at top edges, we get accumulations. When it doesn't, we don't. You know, so there would be a strong case to say, well, why not just wait for those accumulations to take place and then try and buy into that as a fader? Well, that's a really nice way to think about fading the marketplace. So in other words, this is a fade opportunity if you get a lower low. This is a fade opportunity if you can get a swing high here. This is a fade opportunity if you can get a swing high here. This is a fade opportunity at a lower low. And this is a fade opportunity at a higher high. This will probably start developing into a fade opportunity. Not always, because you see sometimes it turns back down here. So this could be a fade opportunity on a retest back into the low price here. So the lag actually works on our favor on this occasion, doesn't it? We get that sense of an accumulation because it works with us. And because we're using the max move against an early to the party indicator, it starts acting on it. It's not based on price, by the way. This indicator is not, interestingly enough, based on price. It's based on the max spectrometer. You understand? It's actually based on the max spectrometer. So on the basis that it's not based on price, but based on price as a second derivative, then of course it's going to still have an awful lot of the price elements part of that trade story, right? But we know that the max spectrometer can at times be very early to the party. So what it's going to do is it's going to give us that ability to see the kind of follow through accumulation phases. And those follow through accumulation phases are going to become things that we can look at and say, now there is our trade opportunity to play. And that's what we're kind of trying to work on in this basic idea. So I'm hoping to finish it this Thursday.